We are off to the races here. Stocks open for trade. We did see stocks fractionally lower pre-market. I do want to bring in our market expert now, Jonathan Corpina. He's a senior managing partner at Meridian Equity Partners, joining us from the trading floor. Jonathan, great to see you this morning. What's on your radar as the stock market opens?
Hey, good morning, Kristen. Thanks for having me on. Yeah, a lot of exciting things going on here as you guys just witnessed the opening bell. But when we take a look at what's going on with the markets, clearly still have a lot of volatility here, day in and day out, mostly headline driven at this point. Yes, we are looking at the economic data that we get out on a regular basis. We're almost through earnings season, and we've seen the implications of that. But right now, as I said before, it's headlines that are moving this market. It's giving pause to investors as we've traded near the all-time highs within the last 4 or 5 weeks here. And that gives them a reason to take some short-term or long-term profits off the table. A lot of uncertainty in front of us, right? We're going to continue to look at our economic data. We're going to continue to talk about the Fed and what the Fed is going to do. And we've got our geopolitical risks that are out there that'll continue to add volatility to our markets. I'd like to see the VIX get down sub 20. It's going to take a little while and a little bit of help to get there. But as of now, I think we're going to continue to see this volatility.
Let's talk some of the economic data that you referenced there. Tomorrow will be a big day, Jonathan. We're going to get fourth quarter GDP figures. We're also going to get the Fed's preferred inflation measure. What is the market anticipating, and what kind of response could we see in extended trading before markets open on Friday?
Yeah, I'll kind of work backwards on that one. Anticipation, the reaction of it, I don't think we're going to see a large reaction to it. Again, I think what we're looking at is we get all this economic data, right? Where the Fed processes it, and then their output is what they're going to do with interest rates. So I think we're going to obviously intake this information here. We've seen over time our economy has gotten better, our job numbers have gotten better. All this coupled together is going to give a lot of information for the Fed to make a decision. All indications now is that yes, we are going to get rate cuts, but we're not going to see them until at least the second half of the year. So I think the step measures that we will see from this economic data is, again, that our economy is getting better. Inflation is coming down. I think investors, Main Street and Wall Street, are feeling a little bit more comfortable in the economic environment that we're in. We need to see that stability for our markets to then reflect that stability.
Yeah. I do want to ask you about what we can anticipate a week from tomorrow, because that is a large MSCI rebalance. You've been here on the floor for decades. What does that do to markets?
You're aging me. Yes, that's a quarterly event that we get. Where we see a large rebalance in some of these indices that are there. The Morgan Stanley International Indice is going to do a large rebalance. That gives portfolio managers an opportunity to buy and sell larger portions of their portfolio, kind of true them up, get them back into line as to their parameters in which they are allocated to their individual holdings. And when you see these large imbalances, these large volumes, it gives, again, portfolio managers this opportunity, but the impact on the stock prices isn't as much as it would be on a normal day, because there's a lot more volume, a lot more depth to the markets for them to get in and out. So I would look at some of those larger names that are out there. You're going to see a significant spike in volume. And again, that gives investors, even small investors, an opportunity to move in and out of stocks where the volatility wouldn't be as much as it would be on a normal day.
How would you categorize trading that we've seen in 2026 so far from your perspective down there on the floor?
Kind of interesting, right? Coming into this year, clearly talking about interest rates and what the Fed is going to do. We've seen the economic data and some of our geopolitical risks that are out there that have caused the Fed to pause. So I think that trading, those aspects have caused a little bit of a pause to our trading, right? I think some of these key factors that we were looking forward to haven't occurred just yet as far as interest rates are concerned. I also think as far as geopolitical risks that are out there, there's clearly some things in our forefront that can really change the trajectory of our markets and of our economy. So I think so far early in this year, we are still waiting and anticipating what the outcome is going to be. Looking forward and down the road, as I said before, second half of the year, I think we're going to start to see the Fed get back into their schedule of lowering interest rates. And I think also exciting to watch the IPO market. We've talked about some pretty exciting large IPOs that'll hopefully be coming to the New York Stock Exchange here to spark our economy. I think that market, that syndicate, that IPO market has been on the shelf for a while, and we're slowly starting to see that come back here.
It's a hot space, if you will. That might be a deep tease. Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, joining us right from Neera's booth on the trading floor. Jonathan, thank you.
Kristen, thank you. Have a great day.
You too.